Hi everyone, welcome to our March edition of our research roundup. So myself, Ellie, the social researcher at Fair4All Finance, and Neil Alexander, the consumer and insights manager, have prepared some of our favourite pieces of research and insight that we think is most aligned to some of the work that we do. Just to reiterate, this is all of the research from the month of February alone, and we're presenting it in March, which is why it's called the March Research Roundup. So we've seen a lot of different things around budgets with the budget released on Wednesday, the 15th of March. So we saw lots of different announcements, which includes the energy price guarantee remaining at £2,500 until July, which is rather than the rise to £3,000. We're seeing that inflation was predicted to fall to about 2.9%, but as we know, currently that isn't the case, and inflation is set to rise. We're seeing a lot of things around the free childcare for younger children, and that is something I'll touch on a little bit later. The national living wage rose up to £10.42, and universal credit payments and the state pension will rise by 10.1% from April. It's been quite difficult to assess the impacts of the different banking turbulence, but the Bank of England said that major UK banks' capital and liquidity positions remain strong and pre-provision profitability has increased. The banks are therefore well placed to absorb shocks and continue meeting the credit needs of households and businesses. But we know historically during times of market uncertainty that banks have tightened their lending criteria as a protective measure. So we are going to keep an eye on this. So as I mentioned, I was going to touch a little bit more on childcare and system change. So this was a widely shared part of the budget, and it does highlight the systemic problems of implementing something on scale. So it was really celebrated that free childcare was going to be implemented. But we know that this isn't going to be implemented until 2025. So those with younger children now might not see the benefits of the free childcare. We're also seeing that the childcare providers in turn need to scale up the support that they offer. But over 5,000 childcare providers closed last year, and the providers are currently losing around £2.20 per child per hour. So it is important for the childcare providers that proper funding is provided to fill this gap. We'll tie in a lot more of the budget impacts in next month's roundup once the dust has settled and some more in-depth analysis can occur. But in the meantime, we hope that this sort of introduction will help with that. So our first piece of research is the future of credit, which was a summary report of research conducted for the FLA by Britain Thinks. This was a 90-minute workshop, an online polling of over 2,000 members, a digital ethnography with 30 consumers, and 20 of these participants took part in a workshop. So it's a really in-depth methodology, and a lot of different thoughts were taken from this. One of the things was that to improve the experience of consumers, there's 4 principles that should underpin the relationship with lenders. So that's greater personalisation, greater flexibility, greater control, and greater education. And also, when consumers are accessing credit, they do want some barriers in place to provide the space to assess whether that credit is required and not based solely on emotional wants. So some products do prevent a convenient way to pay, leading to a sense of why not, rather than some rational thinking in some cases. Moving on, this is the Joseph Rowntree Foundation and Trussell Trust. Guarantee our essentials, and this is about reforming universal credit to ensure that we can all afford the essentials during hard times. There was a really detailed technical report that defines the estimates, so if you're interested in that, I would definitely recommend taking a look. And what the essentials guarantee would provide is that universal credit should protect people from going without essentials, and that would be a standard allowance of £120 for a single adult and £200 for a couple. And at the moment, there is around a £35 gap to afford essentials for a single person, and there's a £66 gap currently for a couple that are aged 25. So it's really important that we guarantee that you can afford essentials. And if this was implemented, around 8.8 million low-income families would benefit. Next steps is the annual fuel poverty statistics in England 2023. So this highlighted that 3.26 million people are in fuel poverty in England, which is over 13% of households. And it's actually projected that in 2023, 300,000 more people will find themselves in fuel poverty. And we're seeing that proportionally, the households in fuel poverty is highest for private renters, single parents, households who have someone from an ethnic minority background as the reference person for the survey, and households with an older member between 16 and 24 and in receipt of benefits and on prepayment meters. Next up, we have the buy now, pay later. What we thought was interesting about this is that it estimates the size of the buy now, pay later market at around 6.4 billion in the UK, which is slightly lower than Klarna's estimates. So we find that quite an interesting statistic. And only 3% of those who have used buy now, pay later describe their financial situation as vulnerable, but 35% indicate that they have little to no savings each month, which for us does highlight some vulnerability. So this is quite an important point on language and what vulnerability might mean for someone answering this survey. And last but not least, this is a report from Citizens Advice about the IVA market and how it's failing people in debt distress. So this was 26 in-depth qualitative interviews, and it showed that IVAs often cost more in fees than other solutions, a maximum of £4,000. 73% of people who have been in an IVA struggle to make repayments, and the Treasury should bring pre-IVA advice under FCA regulation, which will increase protections for consumers in the IVA market. And there's a great diagram there which highlights the kind of problems that people that are paying for IVA costs currently face. Thank you so much, and we hope that this has been useful, and see you next month.